Today I have with me the man in charge of a large global conglomerate, the one which has huge presence in the metal and mining space and also fair bit of operations in the oil and gas space. I'm talking about Vedanta Resources, which is a London-listed company, and also the parent company of India-listed Sesa Sterlite, Hindustan Zinc in India. Tom Albanese, welcome to the show.
Thank you. It's great to be here today.
Same here, and you have a huge role to play. It is a large conglomerate with presence across various sectors. Now, since the time we know about Vedanta Resources, Anil Agarwal, the promoter of the company, has been calling the shots. What is the mandate that he gave you when you were appointed the CEO of this large group?
Well, thank you. I've been involved with Vedanta and Sesa Sterlite really since September, and chief executive since April 1st. So it's given me the opportunity to get around all the businesses, to meet with teams all around India and around the world. I think I visited probably over 20, 25 sites in that period of time. And it really has allowed the chairman, Anil Agarwal, and I to work out the relationship between CEO and chairman, where basically I'm focusing on taking those businesses that are all either world-class or they have potential to be world-class businesses and take them to that next stage of performance, to improve all aspects of the businesses. And I think that working with the teams, and the teams are very open, they're very adept, they're very sharp, and they want to move to that next level. And just working closely with the board, working closely with the chairman, and really create a great performing business.
You also inherit a lot of problems that Vedanta Resources, like many other big business houses, especially attached to the metal and mining space, have been facing. How big are these challenges? And you having the global expertise in metal and mining space, what are the few things that you would state to the new government which can be changed and is immediately required?
Yeah, I think first of all, we have strong businesses, strong people, strong capabilities. Over the past few years, we've found that our forward progress in many ways has been held up. It's not been held up deliberately, but through, I think, policy delays or policy confusion. So from my perspective, the new government can really be helpful in terms of opening up these businesses, creating new jobs, creating new domestic sources of the products for value-added industries in India.
New government which is in place, even before they took over the job, there were some economic agenda that were being spelled out. And one of the key points that I noted was that they are pro-steel industry when it comes to iron ore, which is the key raw material for them. Now, you export a lot of iron ore. Do you think that if there are restrictions when it comes to the export of the resource, it could be a hindrance for a group like yours?
There is no shortage of iron ore in India. As I've been meeting with the geologists in Goa, in Karnataka, and elsewhere in the country, because I've been involved with iron ore and Orissa in the past, there are huge resources of iron ore. There's no shortage of iron ore for the future generations of the Indian steel sector. There is a shortage of capital that's going into the iron ore sector because of a series of policy issues and a series of issues that we have to improve our own positioning and our own performance with the iron ore industry. But as we can attract more capital into the iron ore industry, and I think that will be stimulated by exports resuming, because that will actually cause the iron ore companies to make money, and then they can reinvest. We'll find more iron ore.
Do you think with the ban being lifted on both Karnataka as well as Goa, now the mining woes are behind us when it comes to Sesa Sterlite?
I hope that we're in the right momentum. Again, the ban has been lifted, but it's been lifted with conditions. It's been lifted with the condition of a cap. And I think that as an industry, we have to show that working within that cap, we can operate in a way that is environmentally sustainable and workable within those communities. And then we can argue for a lifting of that cap. There are some uncertainty regarding the deemed extension of the leases. And I think that's something where we would need to work with the state of Goa. And we're looking forward to doing that in due course so that there's clarity on mineral tenure, which will then allow clarity on investments that we can be making. And a number of other provisions that I hope to be in a position where we can begin resuming the exports of iron ore as we come out of the wet season.
If you are told to value add as well, then Vedanta has had this dream of getting into steel in the past. Do you think that that's something that can be brought about now?
I think we'd have to look at the right allocation of capital and what is efficient. And I think that recognize that some iron ore, and depending on where it is from a geologic perspective and a location perspective, is very well suited for value addition within the country. And that's most of the iron ore in India, but that other iron ore, which is lower grade, that frankly there's only a few industries in the world that actually know what to do with it, and that's largely the Chinese iron ore industry and the steel industry. Well, we should be creating the export opportunities. We should use that money so we can reinvest it to find some of more of the higher grade stuff that's actually best suited for the Indian steel sector.
All right, you're not disclosing much when it comes to any sort of value addition, but your next priority will be bauxite and Vedanta aluminium. That's been held up for a very long time, and we have seen several controversies around it. You have tried to put to bed most of these controversies by saying that till the local people do agree with your stance and your mining activities, you will not go ahead with it. What is plan B then?
From my own perspective, again from a geologic perspective, Orissa is very well endowed with bauxite. And what we are currently focusing on would be those areas in Orissa where there is geologic occurrences of bauxite, but they're also not the same type of forest issues, nor are they the same type of community concerns that we've seen in the recent controversy at Narendra. And from my own perspective, that's the right way to go. That if we don't see the consent of the local communities, well, we'll go fishing elsewhere.
Yeah, and what would that elsewhere be is what I precisely wanted to know.
That's what we have our geologists working on as we speak.
All right, and have you also communicated this to the government to give alternate mines if these mines are not available?
We certainly look forward to working with the government of Orissa. We have a relationship with the government of Orissa. We have a memorandum of understanding, and so I think what we'll do is we'll find that win-win solution that allows us to find it so that we can actually then use local bauxite ores for the Langica refinery, and we can actually make that even a bigger and more important job creator, because we should be looking to produce our own bauxite, Orissa producing its own alumina for Orissa and Odisha aluminum smelting.
I was pressing on this particular question because VAL is pretty much reflecting in the listed company Sesa Sterlite. A large part of debt which has been sitting on the books of Sesa Sterlite is on behalf of Vedanta Aluminium. There's a mammoth project, aluminium refinery as well as smelter, which has been created without the feedstock. Therefore, it is the pressing need for the company, which you yourself have also recognized. But what I wanted to also ask is whether you will spend a little more money and probably get some bauxite mines so that your plant can be up and running and all that you have invested don't go for a waste. You did make a small investment, 1,800 crore rupees in 2012 by buying out a certain stake in L&T's Raycal. Is that one of the options in front of you? Have you looked at it at all?
I would like to see that we develop a portfolio of options so that we have many opportunities to consider what's the most economic and actually the right grade of bauxite for our refiners. But I want to just say also that equally important in terms of improving the fortunes of Vedanta Aluminum would be beginning to turn on the pot lines and using our pot lines that we've already largely completed with our power generating facilities, which we've completed, and basically put A together with B so that we can actually produce more aluminum. And we'll source the alumina and the feedstock for that either from our own refinery or from other alumina businesses in India, or even we can import the alumina and again do the value addition so that we can produce aluminium metal in the state. And so equally important for the business is getting the bauxite as it is, progressively putting those pot lines into production.
That's right, but they won't be probably as cost competitive, and with the kind of LME prices that we are seeing right now, where commodities are per se not performing that well because of the economic scenario globally, then probably it won't be as cost competitive.
Well, I think actually largely because the LME environment is weak, we have also seen that there's a mismatch of supply and demand for aluminium. So premiums are high. So when you look at the LME price plus the natural premiums that our product would attract, actually we can make an operating profit off the aluminum that we produce. So from my own perspective, we have to be ready to survive in this weak LME market, but we can put new pots into production in this market as long as we have the access to what I would call competitive power. And again, we have power generating that we've invested ourselves substantial sums of money.
All right, so when we are talking about feedstock and cost competitiveness, coal is another big factor for aluminium. Now, Balco definitely has a huge reserve of coal mine. Any plans of starting that mine, getting the approvals done in this financial year? Could we see anything?
We've been working very closely with the state government, and we do look forward to getting the final approvals so we can have our own captive source of coal, so we can again start ramping up some of the capacity at Balco.
While we are talking about Balco, and let me also bring in Hindustan Zinc, and the biggest topic for these two companies for a very long time has been the residual stake buyout. We were at a kissing distance with the last government, where it was stated in the budget as well that it will be done. It didn't. Are you seeing some hope right now? Where do we stand when it comes to that stake buyout?
I think it's been an example of a privatization that has actually been incredibly successful. So from my perspective, the remaining government interest is a non-operating interest. I think the sale of that through transparent auctions, that way would be seen to be acceptable to the stakeholder and the Indian taxpayer, would be something that would be, I think, good for Hindustan Zinc, good for Vedanta, and probably good for India. And so we look forward to that taking place. And I think it is good. It is a way for the Indian government to actually balance fiscal policy, because it has a lot of agenda items in terms of needing to spend money on. This is a way to bring some money in.
You did embark on this huge process of simplification of the group. That's when Sesa Sterlite came into existence by merger. Now, the talk also has been that if you get Hindustan Zinc, Balco, all residual stakes inside, then probably that will also collapse and merge into the company, which makes sense for the company.
I think that as I meet with the investors of Sesa Sterlite or Vedanta or the other subsidiary companies, they tell me, say, Tom, this looks quite complicated, and what can you do to make it less complicated? I think that the government, if they sell their interest in Hindustan Zinc and Balco, provides a pathway to make it less complicated for the investors. I think in the long term, that's good for the company, because they'll be seeing this as an even better investment opportunity going forward in the future. And we'll look at what are the best options that are actually good for the company and certainly good for the minority shareholders.
And when I talk about the various offshoots of the company, I also look at Cain India, which is a cash-generating company. Now, is it in the process of further simplification of the group, a plan to merge that eventually with Sesa Sterlite?
We've talked about $3 billion over the next several years, so we can intervene in the fields, so we can include more polymer, more fluid injection, so we can keep the pressure up in the field to keep the production going, while bringing the next generation of discoveries into production. And that includes natural gas. And I think that we think about Cain India as an oil producer, but I think what you're going to see in the coming years is more and more natural gas being produced, because we've been recently making some good discoveries of natural gas. And we hope by this summer to be in a position of deciding to not only build on the existing gas pipeline we have, but again, think about beginning the procurement for a 24 or even a 30-inch pipeline from there. So it'll be an oil producer and a gas producer. Meanwhile, of course, we have at Cain India, they're buying back their own shares because they see that this is a good investment opportunity for Cain. And that would be, I think, part of the success story which Cain India has been.
What is the status of the buyback at this present moment?
Well, of course, share prices have gone up a bit, and so that's kept people from buying back into the shares.
In fact, the sense in the market is that that's holding up the share price because of the buyback.
Well, I think that, again, we've done about 20% of the buyback at this point in time, and if the share price is above the buyback price, well, then we're not buying back shares. All
right, and good you brought in that production as well as gas production in Cain India. Now, is gas production extremely crucial for you, Mr. Albanese, at this point, when you are having a tug-of-war with the government in terms of the PSC, which they don't want to extend for 10 years and are only giving you 5 years, but it is extremely crucial for you because you have already committed to about $3 billion of investments. A capital allocation bit is also quite large.
Well, I think that, again, the gas development makes sense in its own right. So what we want to do is we want to focus on
irrespective of this.
It makes sense in its own right. We should be developing the gas. We should recognize that within the lease terms, there's an automatic provision for a 10-year extension with the development of gas. But again, as we look forward, We look at gas production and we look at converting that to oil equivalent, and we're talking about maybe 10 to 20,000 barrels of oil equivalent from that gas. These are big numbers, and again, this is not gas that's offshore that has to be liquefied or anything else, or has to be shipped to some other country. This will find a market right in India.
All right. Market for gas is no problem in India, of course I know, but
so uncertainty.
Uncertainty from two counts as far as Cane India is concerned. First, of course, the production level went up at a rampant pace when the takeover happened from Vedanta Group from the erstwhile Cane Energy. But now you have already said that the projections are such that the production level will go down. How are you going to cap or put a floor as far as production drop is concerned? What could be the levels that you could be looking at achieving? And second, of course, there is uncertainty when it comes to retaining an E&P expertise as a resource to head the company.
I think that, first of all, that any high-pressured field, which is what the recent discoveries have been in Rajasthan, which have given the production uplift, as those pressures naturally mature, you'll see a natural decline in production that will take place unless intervention is in order. So what we've been working on, all the engineers are focusing on, would be those intervention techniques and technologies. And this is world-class best practice technology. First of all, to keep the pressure up the field, increase infill drilling, and begin what will be the world's largest polymer injection process for the purpose of mitigating that decline. And that gives us then the time to put the next generation of oil and gas into the pipeline, because we do expect to see continued cumulative growth, probably at least 6% on a cumulative basis going forward, recognizing that we have to do this injection this year, so it's probably flattish production during the course of this year before it resumes that upward march. And I think, again, that's the right thing that we should be doing. Now, I've been visiting the Cane team many times, just there again last week, and you have a really strong team, lots of young, energetic people that are mixed with more senior skilled people, both Indian and also in some selected areas, expats. So it's a very good group. Sudhir, as the acting CEO, is taking charge quite well, and he has my full confidence as we go forward. And I think that, from our perspective, we're looking at this being an Indian organization that's going to grow and develop, and I want to see that organization grow as we see the Cane business grow.
But you're not talking about any expert in this particular sector to head the group.
We will be looking for the right person to be the CEO for that group. In the meantime, though, we have very strong technical teams.
I also wanted to know about the tax issue. Now, most of the multinational companies have been facing the tax issue. Cane Energy is one of them, but what is surprising is that Cane India has come in that fold. How big an uncertainty is this? And if things don't go your way, then what could be the concern or the amount with which you will have to deal with?
Yeah, I think, again, for a little bit of background, Cane Energy, the original company that bought the field from Shell, IPO'd Cane India back about 3 years before Vedanta acquired its interest in Cane India. And Cane Energy, which is headquartered in Scotland, a UK company, is seen as a foreign investor. And it's much similar to the Vodafone type case, where there is a question of retrospective taxation. And I spend a lot of time in the UK because I've got an office in the UK. My primary office is here in Delhi. And I can tell you from the UK and the international markets, they see this retrospective taxation as a disincentive to investing in India. So whether it's Vodafone or whether it's Cane Energy, it has the same effect. So I'm looking forward with the new government, and again, recognizing that it's good for India to be bringing big chunks of foreign direct investment into India, that there'll be a reduction in what I would consider retrospective tax uncertainty for international investors into India.
And in this regard, what is the inside thinking at Vedanta Resources when it comes to the new government? Do you think that they are a little more approachable and a little more understandable when it comes to doing or ease of doing business in India?
I'm very excited about that, because I think that there are many opportunities with respect to policy, with respect to regulation, with respect to incentivizing new investment in India for Indian jobs. And so, whether it's the aluminum business or the iron ore business or oil and gas or zinc, or more importantly, creating increased demand in our businesses for our products by Indians who are basically consuming manufactured goods, value-added goods in India, it's a great story for Vedanta.
A lot now depends for Vedanta Resources and its operations in India on the government and government policies. We have seen a court case when it comes to Tuticorin, your copper facility. We have seen mining bans which have affected Sesa, earlier erstwhile Sesa Goa. When it comes to aluminium business, you haven't got the mines which were promised to you. And on Hindustan, Zinc and Balco, you haven't managed to buy the residual stake. Everything depends on the government. How much of your hope is really hinging on the new government?
Well, I think, first of all, from a mining perspective, one has to be an optimist. And I'm a natural optimist. And so as I look at the challenges that Vedanta and Sesa Sterlite face, I see each of the individual challenges as solvable. And I look forward to working with the government. I'm certain the whole company looks forward to working with the new government to overcome each and every one of these challenges. Vedanta is a great company that can be greater, and this is about creating that trajectory, and we're doing just that. And I hope to see this as just a litmus test for the rest of Indian industry.
All right, you started with 58.3% in Sesa Sterlite, the Indian company. Now, despite pressures on cash on the group level and the parent level, you have increased the stake in Indian company. As far as capital structure is concerned, how much higher would you like to go, and why an increase in stake in the Indian company?
This is a small stake, and it's been similar to what we've done over the years. And again, I think we see that Sesa Sterlite, even with the recent very strong increase in share price appreciation, is still a good investment.
All right, and you have given me many reasons for this investment because you are looking very hopeful about the Indian operations. I would just finally like to ask you one question. Do you think, Mr. Albanese, that with the kind of investments and assets that you have created across the world and in India, do you think that the entire portfolio is balancing out each other and is well hedged in the interest of the group?
Well, I've been involved with diversified mining companies all my career, and I do see the benefit of a diversified natural resources company which has different products. All of them ultimately play to GDP growth. So as consumers are wealthier and they consume more, that's good for our business. Sometimes oil may be up 1 year and zinc may be down another year, or vice versa. So there's a natural hedge in place with a diversified producer. And it also provides an opportunity to allocate across the best businesses at each and any given time. So I think that the diversified model works quite well, and I've been a supporter of it.
And do you think that M&A will still be a choiced vehicle of expansion by this group?
I think we have a very good track record of opportunistic M&A at the right time when the market, and particularly before the markets took off because of the China phenomena, starting in 2005 or so. And so, again, we'll be opportunistic, but at the same time, what we've said to our shareholders is the first priority is to get those businesses up that aren't yet delivering what they should be, like aluminum, like the iron ore. We do need to focus on delevering. I would like to bring the overall debt at the gross level and the net level down in the company. And of course, we'll always be opportunistic in the meantime.
All right, Tom Albanese, thanks so much for giving us a lot of perspective about the group. Thank you so much.
Great to be here. I appreciate it.
Thanks so much.